Hello, Sambik here. I have been wanting to do this for a while. Um, in this video, I'm going to create a three-statement integrated financial model, not for a lemonade stand company, but for a lemon company. In this model, we're going to create a lemon company called Lucky Lemon Company, and we're going to model the purchase and sale of one lemon. That's it. It's going to be an integrated three-statement financial model for the purchase and sale of one lemon. And when we purchase the lemon, we will pay for it right away. And when we sell the lemon, we're going to get the money for that sale right away. So with this model, you will get a solid understanding of how the three financial statements, and when I say three financial statements, I'm referring to the income statement, the balance sheet, and the cash flow statement. You'll get a solid understanding of how those three statements are linked together. In this video, that's all we're going to cover, what I just said. In the next video, we're going to cover what happens if we pay later for the lemon that we've purchased, and if we receive the money later for when we sell the lemon. And with this video, the next video, and the subsequent videos where we expand on the model with more scenarios, the grounding that you will get will be solid. You'll have a sort of fundamental understanding of how the three statements are linked. Now, before we get into it, one thing you need to remember, this is going to be very helpful for you, is that there are two main linkages between financial statements. The two main ones are net income from the income statement feeds into equity on the balance sheet, so retained earnings. So net income feeds into the change in equity on the balance sheet, and typically retained earnings in the equity section of the balance sheet. And then the other key link to remember is that the ending cash balance on the cash flow statement equals the cash in the balance sheet at the end of the period. So basically just memorize those two linkages, and we'll see them in the model that we create here, and we'll see them in the Excel spreadsheet. So in the model, each accounting period, I'm assuming, is 1 month. And within each month, I will just have one transaction. So by doing this, you'll clearly see how that one transaction impacts the three financial statements. And in this model, we have three transactions. We set up the company, we buy a lemon, and then we sell the lemon. And that's it. And I know it's very simple, but it, as I said, will give you a solid foundation, and understanding the integration of the statements at a foundational level is really important. All right, now let's go to the spreadsheet, and you can download this spreadsheet at the link below. And so this is a spreadsheet. This is the financial model for Lucky Lemon Company. What we first have is the cost of a lemon. Now, I know these are very expensive lemons. The cost of a lemon here is $20, and the price that we have a lemon at is $50. And then we've got the assumptions here as to the number of lemons we purchase, and then when payment is made for that purchased lemon, also the number of lemons sold, and when payment is made for that, or payment is received for that sold lemon. So here you'll see in February 2025, we purchase a lemon, and we pay for that lemon at the same time we purchase. So that's represented by the ones here. And then here in March, we sell a lemon and we receive the money for that lemon at the same time that we sell it, and that's represented here. And so these assumptions drive the model below. Now what we're doing in January is we're establishing the company. So, I fill out paperwork to establish a company called Lucky Lemon Company. I provide the company with starting capital of $1,000. So this is the balance sheet. In the initial equity capital section of the balance sheet, I basically hard code this to be $1,000. That's the money that I've provided. Then in the cash flow statement for the first month, initial equity capital contribution $1,000. So total cash from financing $1,000. So cash at start of the period is $0. Change in cash during the period is $1,000. Cash at end of period is $1,000. Now end of period here is the end of January 2025. And let's look at the first linkage here. This cash here, and I'll click on that to select it. This cash amount here equals F76, which is the ending cash balance of the cash flow statement. So that's it. That's the first month. We just contribute $1,000, and so we have $1,000 of cash in the bank. Total current assets are $1,000. Here, total assets $1,000. We have equity capital of $1,000. So total equity is $1,000. So total liabilities and equity is $1,000. So as you know, in the balance sheet, total assets must equal total liabilities and equity. And that is true here. Nothing is happening on the income statement here because nothing's been sold. And then on the cash flow statement, we've got $1,000 from financing due to the initial equity capital contribution. Okay, so that's that. In February, we purchase a lemon for $20. So that is represented here by inventory going up, increasing to $20. And you'll see the formula here. It drives off F32 plus G7 minus J. So it's driving off these numbers here, plus the cost, this number here, and then adding to the previous month. So we purchase a lemon, and the effect on the income on the balance sheet is that the inventory increases by $20. And this cash here goes down by $20. As I've mentioned, we pay for that lemon at the same time as we receive it. So you'll see there, that's a link from the cash flow statement. So you'll see how the cash flow statement is impacted right now. If we go down to the cash flow statement, we have change in inventory minus $20. So what that means is when inventory increases by $20 in the balance sheet, the impact of that on the cash flow statement is that cash goes down by $20. That kind of makes sense, right? If your inventory goes up by $20, meaning you've purchased a lemon for $20, then that equals a reduction in cash of $20, and that's what that represents here, minus $20. And you'll see that the formula is G33 minus F33, which is the change in inventory between the current month and the prior month. So total cash from operations is minus $20. there's no change in cash from investing, no change in cash from financing. So cash at start of period is $1,000 minus the $20 change in cash from operations, so minus 20 equals 980. And that 980, which is cell G76, feeds into this number here. So that equals G76. So we're balanced. We've got 980 in cash, $20 in inventory, so $1,000 in total current assets. So total assets $1,000. And we still add $1,000 of equity capital. So total liabilities and equity is still $1,000. The purchase of a lemon also does nothing to the income statement. Again, nothing is sold, so nothing is happening on the income statement. So then the next month, the final month, we sell a lemon for $50, and we receive that $50 right away. So that is represented on the income statement, $50 sale. Cost of goods sold is $20. What happens is this $20 is coming from inventory. So as we sell a lemon, the cost is $20, so that's shown on cost of goods sold. And then as you see on the balance sheet in the third month, inventory is now zero because the $20, the lemon has been taken out of inventory and it's sold. So that means that the inventory decreases by $20. So, okay, so back to the income statement, we've got $50 in sales minus $20 in cost of goods sold equals $30 in gross profit. So we got net income of $30. On the balance sheet, as I said, inventory goes down by $20. And this here is coming from the ending cash balance on the cash flow statement, which we'll get to now. As you see there, it's 1030. So, and then further down on the balance sheet, we have retained earnings equals $30. This comes from the income statement. So H28 plus G52. So net income. So net income in the current month is added to the retained earnings. And so we've got total assets of 1,030, total liabilities and equity of 1,030. But let's look at the cash flow statement. We have net income of $30. That's the first line in the cash flow statement in the cash from operations section. Then we have a change in inventory of $20. So just like an increase in inventory meant cash goes down, when you have a decrease in inventory, that means cash goes up. And so it goes up by the $20. And so 30 plus 20 equals 50. So total cash from operations is $50, which kind of makes sense because we sold the lemon for $50. We received $50 in cash. And this is represented on the cash flow statement by saying we start at net income of $30, and then we have to adjust for what's called working capital changes. And so the one that's of relevance here is that change in inventory going from $20 to $0 on the balance sheet. So if something comes out of inventory on the balance sheet, that means it must have been sold. And so you have an increase, and so you have cash coming in. And that's why you have the $20 here. So total cash from operations equals $50. And you have cash at start of period, 980, plus change in cash during the period, 50, equals cash at end of period, 1030. So that is the ending cash balance, and so the balance sheet 1030 equals H76. So that's basically it. if on this last line or column here, I sum, the first 3 months to give the income statement, and then the balance sheet, I'll take the snapshot of the last month. Cash flow statement, I sum the 3 months, and so you get the financial statements for the first 3 months here. But this is, that's it. It's showing a integrated 3-statement financial model for the Lucky Lemon Company. And in the next video, we will introduce a concept of paying later for a lemon that we've purchased and receiving money later for a lemon that we've sold. And you may already be guessing what that impacts, but it impacts accounts receivable and accounts payable on the balance sheet. And then that also impacts the working capital changes on the cash flow statement. So we'll have changes in accounts receivable, changes in accounts payable on the cash flow statement. And yeah, that will be great to show you as well. Thank you for watching. Oh, I nearly forgot. If you found this video useful, please subscribe, please press the like button. I'm looking forward to creating more videos like this. If you have any questions on what I've done here, please put in the comments. I'd be really interested to see what questions you have. Okay, until the next time. Thanks.